Hello and welcome to another episode of Spy Trader Now. I am your host. My name is Ken, and today we're going to give you the recap of where we stand on our portfolio and all of our trades and my technical analysis for the S&P 500. Currently, our year-to-date performance is up 21.02%. If you had the S&P 500 SPY as a buy and hold strategy, you're currently down 17.2%. So we are completely smoking the S&P 500, which is the goal of Spy Trader Now. Spy Trader, you might ask yourself, what is Spy Trader Now? Spy Trader Now is a stock trader service that I'm promoting that you can get my real-time trade alerts. You can sign up, just go to spytradernow.com and you can pick a subscription if you'd like to sign up and get real-time alerts via text and email. And here we are, and I also have my YouTube channel, Spy Trader Now, so please go ahead and subscribe to my YouTube channel when you can, and then that would be wonderful. You just hit the subscribe button and ring that bell to be notified every time that I promote a new video. Okay, so during the previous week, we have made one round trip trade. We started the trade on 12/6/22. It was, by the way that I do the portfolio is it's only a 3-position portfolio. You're either in SPY stock or just SPY shares directly. SPY is the S&P 500, SPY is the symbol SPY. And it is an ETF, electronically traded fund for the S&P 500, which you just buy directly by the SPY shares. Or SPY, I'll do SPY options, and I'll do both puts and calls depending upon market direction, or I'm just going to stay safely on the sidelines in cash. Currently, we are in cash. So that's where we stand, safely on the sidelines at this date. Okay. So here's the trades that we made, and we made a very small profit. I was only into the trade for 3 days, so holding period in days, it was a 3-day trade. Normally my holding periods are much longer than 3 days, but I personally myself am skittish on this market, so I want to be quick to take profits and quick if there's a loss to get out of it with a small loss like we did last week. Okay, so that's where we stand with the portfolio. It was a quick trade, but we made a small profit of 0.49%, $144. Not much, but hey, I'll take every little penny I can get out of the portfolio. If you had on a year-to-date annual return on investment, this would have returned a return annual, if we could do trades like this all year long, we'd be making 59% on an annualized basis. This is just there just so that we can kind of get a perspective on how well the trade did. So it was a good, even though it was a short trade and it only made $144, it was still on a percentage basis a fantastic trade on an annualized basis. So we still, we made money. Okay, next slide down. Let's move down here. Okay, so here is the text alert that you would have received had you been a subscriber on 12/6, buy 25% of the portfolio in SPY shares long, and then on 12/9, sell all and go to 100% cash. That's where we currently reside. Now I pulled up a 10-minute chart for the symbol SPY, and we got out, and you'll see the time stamp that I sent this text alert, 12:09 p.m. That is on Pacific Standard Time because I live in Southern California. This time that you see down here, that's 3 p.m. And then the market closes at 4 p.m. That's on New York time because this is traded on the New York Stock Exchange. And so that's the time that you're seeing here. So 3 o'clock here equals 12 o'clock in this time zone that I reside in. I made the trade at 12:09. So when I made the trade, it was just right about where this arrow is. And this is really luck. I don't have a crystal ball, folks. I didn't know the market was going to drop like that. I just knew from what I saw that I just wanted to sit in cash and just let the market reside. And as I go through this presentation, I will show you why I made those decisions. But this is actually more luck than skill. I just decided to exit here, and luckily we saved ourselves a 0.6% additional loss had we still been holding long shares. But then you can see here on the thumbnail how it really just dropped off a cliff at that right after I made that trade. Which again is just more luck than skill, but I'll take it. Okay. Now this is not 100% accurate because I just started tracking this performance of how well the portfolio is doing. Starting from this marker to here, that is accurate information. So during the last trading week, our portfolio just went slightly up. Over here, this is the S&P 500 buy and hold strategy for 2022. Had you been a buy and hold investor just holding the S&P 500, this is how you would have done. And in the last trading week, you would have came down because the market came down in the last trading week. Here is the two portfolios compared side to side. Again, this is not accurate information except starting from this marker right here. So from here forward, you can see we went up slightly, the S&P 500 went down a little bit. Okay. And now, here's the decisions of why I decided to go to cash. The main reason why is because of the Fed. I'm going to show you some charts, but even though I'm going to show you charts and trend lines and things of this nature, the thing that is going to make the most difference on how this market moves is going to be because of the Fed, the Federal Reserve System. They have a meeting coming up on December 13th, and what happens during that meeting will have more impact on the market than any other data point that you can bring into the equation of data points. So they're going to discuss monetary policy issues on December 13th. And then they're going to give an announcement after that. And we're going to see basically what they're going to decide to do is they're going to decide what are interest rates going to do. Interest rates have risen in 2022. We've gone on a steady path up. In the last 4 rate hikes were all 75 basis points. And you can see that the current Fed fund rate is a total of 3.75 to 4.0%. That's where we currently stand. There is a complete expectation that on the meeting on December 13th, the Fed is going to raise 50 basis points. And then the meeting after that, next year, will be another 50 basis points, and then they're going to do possibly a 25 basis points for for a total of 125 basis points, bringing the 4.0% to 5.25%. So that's where we currently stand. But the Fed could very easily have a hawkish tone instead of a dovish tone. And if they present a hawkish tone stating that for some reason they want to go with another 75 basis points, which they could very easily do, that will not be good for the market. Or another hawkish tone will say they're going to stick with the 50 basis points, but instead of going with 50-50, instead of going with 50-50 and 25, they're going to go 50-50 and then 50 and then reevaluate. So the market has more, in my opinion, more risk than reward at this juncture, and that's why I went to cash. Now with one other item, speaking of the Fed, that we want to talk to, and that is going to be what's known as the terminal rate. Well, what is the terminal rate, Ken? The terminal rate is how far the Fed is going to take it before they back off. Now, I know that in this article written by Yahoo Finance, Caroline, she said that that the federal terminal rate, which is the maximum rate that they're going to bring interest rates to, has been risen to 5.14. It's actually higher than that because right now we're really looking at 5.25, as I just demonstrated one slide ago. It was at 5.02. The point is that they're raising the terminal rate. Raising the terminal rate is not good for the market, folks. If they take this terminal rate and they go from 5.25 to 5.5%, meaning the top end of the interest rate cycle that they want to stop at, the market's probably not going to like that news. One of the reasons why I went to cash. Now, the VIX. If you look at the volatility index, this is when people are buying insurance. They buy insurance up here because they're scared for what the market is doing. You want to be in the market when you're here and you're traveling down. This is the best time to be in. You get in here, buy the S&P 500 when it hits this line, and you want to sell the S&P 500, generally speaking, when it hits this line. Not always true, but for our purposes for right now, we'll say that it is true. And we've just gone from down to up. We've crossed it going up, not coming down. So we don't want to really be long this market when you're going from a VIX down here at 20 to 22 up to 30, 32, 33. You don't want to be in long during that time frame. You're going to lose money if the VIX is going up and you're long on this market. This is the MACD for the VIX. You can see that the MACD has crossed from pretty much an oversold position, and it is crossed above the signal line. That's not really great for stocks. You look at the momentum of the MACD and you can see that it's going in this upward trajectory. If it continues up, being on the sidelines in cash is going to be much better for us than being long this market. Also, looking at the S&P 500 on a weekly chart, I've drawn, this is going back 5 years, folks. If you look at the long-term downward trend here, this is going to be a resistance line. You see, we came up to this resistance line, came down, came up to this resistance line, came down. We came up to this resistance line, and at this point in time, we have continued to bounce off of it. So that is not good. This could take us from where we are currently at all the way down. Now you see I've got here a downside projected target range. Now my target range is between 370 and just under 320 because this is where you saw some support. This is where the market high came to before we dropped off in 2020. And I am thinking that this line right here is going to be support. I went just a little bit under it because it kind of coincides with support that wound up here. So this is my downside projected target. We've already hit my downside projected target. The problem is that we're not bouncing and going the other way. We're staying down here in this downward trend channel. And if we stay in this downward trend channel, we just hit the upper end of the trend channel. If we hit the lower end of the trend channel, that's going to take us to 330. I really don't want to be long during that time frame. What I want to see is we want to see this, and eventually this is going to happen. The only thing is we don't know when. Eventually, this S&P 500 is going to break through this line. It's going to cross over it, and it's going to go up. Then, of course, we would need to be long to make money in this market. But if it's going to come up here, hit it, bounce it, and come down, you don't want to be long. This is why I am not a buy and hold investor. I am a trader, and this is the reason why I am watching this market. Now, this is on a 5-year weekly chart. Each one of these candlesticks is 1 week of information. Now we're switching over to a daily chart. Each one of these candlesticks right here that you see, that's 1 day's worth of trading. Now I've circled a couple of points here, and I also put in my my lines so you can see exactly what's going on. On 12/6/22, this is when we did a 25% buy, and we bought that on this candle right where my cursor is at, right about here. Then what happened is the market kind of putzed around. I was hoping it was going to come up because this looks like a trading channel between here and here. I was hoping it was going to come up, but then the way it's fluttering around, the MACD has crossed negative. Momentum is traveling down. This here, to me, is looks more bullish than bearish because this is the slow stochastics default settings. And if this black comes up and crosses above that signal line, it hasn't done it yet, but if it does, then that would tell me that we're headed to at least this upper trend line right here. And I was hoping to make some money long in that position, but my gain would be from here to here. If we cross and go the other way, and we cross below that 30-day moving average, we're already below the 200-day moving average. Not good for stocks. If you're below the 200-day moving average, not good. If you're above the 200-day moving average, much better. So that is, we're in this precarious time right here. And when you have money in the market, your money is at risk. So I wanted to just take that risk off the table and let the market sort itself out. Let's see which way is this thing going to break. It's either going to break down or it's going to break up. So I went on the sidelines to take the conservative approach rather than the aggressive approach. It wouldn't be a bad idea to even hold on to my 25% long shares, because it's only 25% of the portfolio. It's in non-leveraged money. It's in SPY shares directly. It's not in options. It's not in a leveraged position, so that if this market were to turn against you or me, it would not be that bad of a hit. But I'm thinking, why take any hit at all? But you're also, when you take money and you put it in the sidelines, if this market turns and goes the other way, you're also not going to participate in that market action. And I do want to participate, obviously, in market action, but to me the risk reward just wasn't there, so I'm just sitting on the sidelines. One of the reasons why I was somewhat hesitant and why it would not be a bad idea to have a 25% bullish position is because of the seasonality of the S&P 500. So if you look at the symbol SPY and you go back 20 years, in December, there is a 70% probability that this market is going to be profitable during the month of December. 70%, the odds are in your favor. Well, where did we start the month? If you look at December started right about here at this candle here, and if we're going to be profitable, that means we have to beat this candle, which means that this market has to basically get to 410 at least to make some money, and there's a 70% probability that should happen. It's not a guarantee. Nothing is guaranteed. So it's not a guarantee. There's risk here, but if you feel comfortable holding some position of your portfolio in this market, you could very easily justify holding a 25% long position right now. I would definitely not go above 50% of direct shares. I would not hold options. I'm not holding anything, but I would not hold options right now. On the 13th meeting, when the Fed speaks, when the Fed makes that decision and they state their announcement, this market is going to potentially jump. The only thing is we don't know, is it going to jump up or is it going to jump down? It's no guarantee. And so it's kind of a high risk thing. It's like a bet in Vegas, and I really don't want to. I want to be an investor. I don't want to be a gambler. So that's why I sat on the sidelines. That's why I'm sitting on the sidelines. Now, last week, this is what the chart looked like. If you can go back to last week's video, you can see my explanation. We came up here, and I thought, well, it's possible that we're going to come up here and kiss what's called the +2 standard deviation. And so at that point in time, right after that, I did that 25% long position. Here's where we stand today, this week, 12/10/22. We came up and we have since came down. Not much. We're just drifting down. But if we continue this trajectory like we did the last two times we hit the +1 standard deviation, well, we went just a little bit above the +1 standard deviation. We've crossed below it. We're below the 200-day moving average. We are above the 50-day moving average, which is bullish, but we are below the +1 and below the 200 day. So we're in this like a twilight zone, you know, drifting sideways. So like I said, oh, and look here, you also have the MACD going down, and the slow stochastics has came down too. So there's a lot of reasons that you can justify bearishness in this market. So that is going to conclude this video. I hope you've got some valuable information out of this video. Please check out my website, spytradernow.com, and sign up for my full real-time trade alerts. You can see the full trade list there as well. And you can also please subscribe to my channel and also hit that bell to be notified of any videos that come out. And I will see you later and wish you good luck on your trading.